Welcome back to the crypto channel, everyone. My name is Josh, and now that the US stock market is open again, this could tell us where the Bitcoin price might be heading next, so stick around for that. Now, first of all, giving you a quick update on this 12-hour Bitcoin chart. Right now, at the time of recording this video, the Bitcoin price is still finding a lot of support at this golden pocket, which is coming into play at around $37,000 to $38,000 per Bitcoin. And while we're looking at the 12-hour Bitcoin chart, technically speaking, we are still seeing a bullish divergence between the price action and the RSI, which technically means there's currently a lack in bearish momentum within this bearish trend. So yes, we're still within this bearish trend because we're forming lower highs and lower lows, but you can clearly see the lack in bearish momentum at the moment. We are starting to flatten out a little bit compared to the first half of April, for example. And this lack in momentum in the Bitcoin price at the moment can also be backed up by looking at the 12-hour Bitcoin MACD, specifically in the histogram, which is right now extremely flat, showing almost no momentum to either direction, which simply means in the shorter term, talking about the day-to-day price action, we're simply looking more neutral rather than overly bullish or overly bearish. But once again, this is still happening within a bearish trend. We have not confirmed a bullish reversal just yet, which is why the Bitcoin price is still trending slightly lower, but not that much lower compared to, once again, the first half of April, for example. But giving you a quick update on the 4-hour Bitcoin chart, technically we are still forming this falling wedge pattern, which is technically a bullish pattern because around 7 times out of 10 it breaks out to the upside, and around 3 times out of 10 it breaks to the downside. So it's simply more likely to break to the upside, but it's not impossible for it to break to the downside, if that makes sense. And so basically we need to see a confirmed breakout in the Bitcoin price above 39,000 in order to confirm the technical price target for this pattern, which is the top of the wedge, coming in at around 42,500. But even if the Bitcoin price breaks out to the upside here, we still have some other points of resistance. For example, at 40,000 approximately, we have this previous ascending line of support, which could now be acting as resistance if the Bitcoin price bounces back up towards 40,000. And the situation right now on the daily Bitcoin chart hasn't really changed from what I've been saying over the past few days. And in case you were new to this channel or you missed my previous Bitcoin update videos, basically over the past few days I've been saying that between around 37,000 and 40,000 the Bitcoin price is mostly in a neutral price range in this no man's land, which means we're in for some more sideways choppy price action, and that's pretty much exactly what we've seen over the past few days as expected. And then the moment the Bitcoin price confirms a break either below 37,000 or back above 40,000, back above this line right here, that would be when the next significant trend will be confirmed on the daily time frame. Obviously, if the Bitcoin price can break back above 40,000, then we are simply looking more bullish in terms of this trend on the daily time frame. But if the Bitcoin price confirms a break below 37,000 with something like a daily candle close well below 37,000, then in that scenario that would be very bearish for the Bitcoin price and would likely turn this shorter term bearish trend into a larger bearish trend, which is why it is very important to keep an eye on those levels that I just mentioned. Once again, around 37,000 as support and around 40,000 as resistance. And until we see a confirmed break of one of those levels, once again we're in this neutral choppy sideways price range. And if you're looking at the daily Bitcoin price oscillators at the moment, they are looking pretty neutral. For example, the daily RSI is just in a sideways trend, not bullish or bearish, and the MACD is showing a lack in momentum with an extremely flat histogram once again. And over here in the Bitcoin order books across all of these exchanges, we still have a lot of buy orders coming into play at around 37,000, give or take, which should be acting as a lot of support at around 37,000, which is really good for Bitcoin. But considering the artificial look to these buy orders, there's actually another risk that we need to be aware of, which I spoke about in yesterday's Bitcoin update video. So if you did not watch my last Bitcoin update video, definitely make sure you're watching that one, because in that video I went into more detail about these Bitcoin order books and the potential risks that are involved with these Bitcoin buy orders. And now taking a look at the US stock market today, this right here is the Nasdaq 100 index on the daily time frame, and we are still trading below this important level right here, sitting at around 13,000. And obviously, as I've mentioned over the past few days, the fact that the Nasdaq 100 index formed a lower low on this chart is a bearish signal, which is telling us that the stock market is still technically in a bearish trend if we're still forming lower lows. But with that being said, there is something interesting happening right now that I just found that is very similar to this previous bottom in the market during the middle of March. And the first similarity is looking at the daily RSI. Not only is the RSI sitting at an extremely similar level to what we were seeing back in March, but on top of that, if you're looking closely, we are forming lower lows in the price action, but slightly higher lows in the RSI at the moment. Now, keep in mind, we have not currently confirmed this low in the daily RSI, but technically we are forming a bullish divergence, obviously higher lows in the RSI and lower lows in the price action once again, which is similar to what we saw back in the middle of March. And this small bullish divergence is of course more visible on some smaller timeframes like this 4-hour chart. You can clearly see right here that we've seen lower lows in the price but higher lows in the RSI so far. Now, once again, we have not confirmed this current low in the daily RSI just yet, but this is a pattern to pay attention to because it is in its formation phase. And even if you look at the price action itself, we're looking extremely similar to what we saw back in March, but the similarities do not stop there. Because in fact, one of the biggest similarities between right now and what we saw back in March is a Fed meeting. First of all, if you remember back to the end of last year and the beginning of this year, that was when Jerome Powell and the Federal Reserve were hinting at raising interest rates in March. And as soon as that information was released, the stock markets began pricing in that interest rate hike, seeing a lot of bearish price action leading up to the Fed meeting, which was March 15th and March 16th. And it was on March 16th right here when we had that first interest rate hike of 25 basis points, bringing the federal funds rate from 25 basis points up to 50 basis points, which is a 0.5%. And considering the fact that the markets were pricing in that interest rate hike leading up to the interest rate hike, the moment we saw that interest rate hike actually happen, even though raising interest rates is bearish for the markets because it was already priced in and everyone expected that, we actually saw a massive pump after the interest rate hike. And right now we're in a somewhat similar situation where we have a Fed meeting in just a couple days, which is happening over the 3rd and 4th of May. And then on the 4th of May, everyone is expecting a 50 basis point interest rate hike, which would increase the federal funds rate from 0.5% up to 1% with a 50 basis point hike. And back here during March, the majority in the market was potentially expecting another 25 basis point hike in May. But then it was right around here towards the end of March, early April, that Jerome Powell started hinting at a potential 50 basis point hike. And once again, the moment that information got out, we started to see the stock markets price in that slightly higher interest rate hike. And so that's pretty much exactly what we've seen over the past 1 month. Simply the markets just price in that higher interest rate hike compared to 25 basis points, which we were previously expecting, up to a 50 basis point hike, which we are expecting now. Now, if we end up seeing anything other than a 50 basis point hike, we could see a lot of volatility. For example, if it's under a 50 basis point hike, for example, another 25 basis point hike, then it's very likely we would see a lot of bullish price action. But if we see an interest rate hike larger than 50 basis points, so for example, a 70 basis point hike or something like that, then in that case, we could see a lot more bearish price action because the market has mostly priced in a 50 basis point hike. But if we do end up seeing that 50 basis point hike that pretty much everyone is expecting, then simply based on this previous example where we got what we expected, we could still see a decent amount of bullish price action in the coming weeks after the Fed meeting, which once again is on the 4th of May. And obviously, I'll be sure to keep you updated on this channel and in real time over on my Twitter. So if you haven't followed me over there, make sure you're doing that. The link is down below. And if you want to know how to maximize your profits in crypto, even if prices are going down, make sure to check out one of these uploads popping up right here on your screen, because both of these videos show you how I make more money in crypto, even if prices are going down once again. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.